Happy February. Wow, Valentine's Day, the Super Bowl, a lot of fun things going on this month. But I'm here to report to you on the Seattle real estate housing market for the month of February 2025. And as usual, I love to inform and educate you. We're going to keep this moving pretty quickly, but I want everyone to be able to follow along. So these are a couple of the vocabulary words, some of the terms that we'll use. Inventory is how many homes there are for sale. Median price is the average price of homes. Closed sales is how many transactions are happening. And this gives us a way to kind of normalize the things that we look at each and every month here in the Seattle real estate housing market so that we can start comparing apples to apples and seeing what the long-term trends are as we look at this in detail and see what we have changing. So the first thing that we're looking at today is called home inventory. This is how many homes are for sale. And as we can see, this year, January 2025, we have almost 400, 500 homes more, 40 or 50% more homes for sale than we did at the same time last year. So that means there are lots of houses to choose from, relatively speaking. Seattle is always in more of a seller's market, it seems, than a buyer's market. But this is good news for buyers who are going to have more selection. And when there are more homes to choose from, there's less of an opportunity for those bidding wars, multiple offers, where the prices just get out of control for the buyers, and it becomes very frustrating and time consuming to try to buy a house. So what we're seeing here is generally a little bit more inventory than we saw last year. And when we look at that in more detail nationwide, the statistics are also showing a forecast for more existing homes for sale. This is resale. And, on average, Realtor.com is predicting 11-12% more homes for sale. Altos research says 15%. But the idea here is that we are projecting more inventory, which means more homes for buyers to choose from and less upward price pressure because we're not having those multiple bidding scenarios. Also, we're seeing home builders bringing more homes to market. So historically, of all of the homes on the market, about 12-13% were new home construction. Now we're seeing of all the homes on the market, about 31% are new home construction. So new homes are a larger percentage of this big inventory that we have. And interestingly, builders are also taking a look at affordability. They're tending to build more smaller houses. Certainly here in Seattle, we have a lot of those townhomes that are going in, which are vertical. Usually they're connected like a row house. Sometimes there are multiple homes on the same lot. Could be considered a ADU or a DADU. And when those are sold separately, they're often sold as condominiums for legal reasons. So if you're interested in new home construction, you will have more to choose from, and you might have more in your price range to choose from. Now let's take a look at median home prices. What's going on here? Are home prices going up, down, sideways, or what? Now, usually we do have a lowering of the prices in the January and December timeframe because this is just kind of the slower time of year. But I will say that we can see overall, January 2025 has higher home prices than January 2024. We're up about 2% year over year. And this is what seems to be happening. We're not seeing huge price increases. We're seeing slow and steady price increases. And this is pretty much predicted for the rest of the year and for the next couple of years. Slow and steady growth. Okay, so this is days on market. If you listed your home on January 1st, you could have expected to have sold it by about the end of the month, maybe February 2nd or so, February 1st. So this is taking a little bit longer to sell than what we saw last year. But as usual, these winter months are certainly our slow time of year. And I fully expect that we will pick up to, the quick days that we're used to in the spring market where homes tend to sell in about a week. So this is really important to look at, especially if you do have a home on the market that's lingering and it's not getting sold in the time frame that you think it should. That might be a sign that it is overpriced, undermarketed, or not presented well. All right, closings. These are how many transactions actually happened where money was exchanged and keys were exchanged. Again, this is looking at January. We are in February now. We have to look back at the last month of data we had, which closed out a couple days ago for the end of January. And those homes that closed in January, it usually takes about 30 days to close a home. So these went under contract in December, usually about the lowest time of year. So we are not expecting to see a big increase here, but it's just indicative that more home closings are happening and that they are, should be picking up from this point on. Market indicators, new listings are up substantially. We have 680 here. I think this was in the 200s before. So last month when I did this, we've had a huge increase, and this is not as much of a lagging indicator about things that happened in December. This is people who have decided to list their home for sale in January. Could have been January 1st, could have been January 31st, but we are firmly entering the spring market with homes starting to come on the market, and buyers are out there. I've got lots of buyers calling me like we're fully in business mode here. This is no more sleepy winter time. This is the spring market in its full glory. So this is happening with lots of new listings. The price per square foot is up a little bit. Some of the listings are selling for a little bit less than full list price, but that's not unusual. However, we're not seeing a huge amount of discounting. Typically, if people don't sell in a reasonable time frame, they are adjusting their prices down to get things sold. And this is talking about houses, in particular houses in Seattle. So if you're looking at condos or something else that might be a little bit softer, then we'd want to dial that in and get a little bit more focused on what's happening in your demographic. But still, months of inventory. This means if we stopped listing homes today, no more homes were available, just what you already have on the market, we'd sell out in about a month and a half. So this is up. It's taking a little bit longer to sell out of the current inventory, but still things are moving quickly. Now, as far as interest rates go, they are close to the 7-point mark here. This fluctuates obviously every day, but it's not been a great month for interest rates. And I expect mortgage brokers are telling me to expect interest rates to be steady, kind of in the high sixes. So I think that it's there, but it's not changing rapidly such that it's a big deciding factor. Unemployment is still low. Demand is still high, especially for houses in the $500,000 to $1 million price point. You're not going to buy a single family home in Seattle for less than $500,000. And 1 million is kind of where affordability stops, especially for most first time home buyers. So this is the strong first time home buyer. I want a single family house market. And we continue to see lots of demand there. Luxury price points tend to be a little bit slower, and affordable condominiums, 300,000 are there, but they also tend to be a little bit slower. So again, if we're looking at interest rates, you can see kind of what's been going on with that. It's been going up over the last couple of months, kind of since the election. If you're getting bad news in the economy, like, oh, the stock market is falling, we're going into a depression, that's the type of thing that makes the interest rates come down. So unless we start hearing some of that bad economic news, I don't expect to see a big downward trend in interest rates. So here's the big question for you today. Is it time for you to buy? And then we'll address whether it's time for you to sell. So if you want the best price, you want to be out, you're kind of doing the opposite of what everybody else does, which is buying a house in winter when it's bad weather, there's not a lot of nice houses available, and you're kind of the only guy who's shopping. So we're coming to the end of that season. And frankly, here in Seattle, I kind of joke the Super Bowl is the kickoff of the spring season. We've got that happening this weekend. And then, my office, they have it pegged even earlier, like the third week of January is the start of the spring season for buyers. This is when buyers start coming out to look for a home. So that part of the spectrum is coming to an end. But now we're entering into the spring market. So as we get into the March through June spring real estate period, you're going to see the most inventory of any other time of year. So if people are sitting around saying, "Oh, darling, what time should we list our home next year? What month of the year? Anytime," then they would probably choose to list it in the spring. And so then we're gonna see those nice homes coming available. We're gonna see more buyers in the market, and this is the time when the most transactions happen throughout the year. And then remember, median home sale prices typically peak around April or May, and they will start coming down. So if you haven't like listed or sold your house by June, that means you're not timing the market. Your kind of season has gotten away from you. And as a buyer, if you're still shopping in July and August, you won't have as many homes to choose from, but there will also not be as many buyers out. So you'll kind of see the competition fading away as well. So just something to be aware of. I think that in general, trying to time the market is not the way that most people choose to go about it, because it's more of a personal decision. When do you want to move? What's going on in your life, your job, your family, those types of things. But the good news is that, the sooner you buy, the sooner you can start building equity in your home. Prognosticators here are forecasting that we will have, like I said, slow and steady price growth in housing over the next 5 years. And so the sooner you buy, the sooner you can start to gain that appreciation on the value of your home. So if you bought a home 400,000, this is not even like a house in our market, right? This is almost like a condo, probably just a condo. But over that period of time, just at those 3 and 4% appreciation rates, you would make over $80,000 in equity gains. So if you can afford to get in and purchase something, you should expect to see some nice growth over the next 5-year period. Now let's talk about whether it's a good time to sell. So the nice thing about selling early in the spring, right now, like February, is that you're going to have less competition from other sellers. There aren't as many homes competing against yours, so it looks relatively good compared to what else is out there. And typically the buyers are already in the field. The buyers come out early. They've made that New Year's resolution to buy a house. They want to beat the spring rush, so they start shopping in January or February, like I mentioned earlier. So the buyers are out. They're motivated to get something before the market goes crazy, and so they will be there looking for your home. And third, as you go into the market, sometimes people aren't sure where to price their home. Oftentimes sellers want to price their home aggressively at the top end of what they think they could get for it. And there can be a tendency, a temptation to overprice your home. So if that happens in spring, the good news is, like, the market is going up, a rising tide lifts all boats. You could potentially see some price appreciation into that time of, like, even if you were overpriced, now you're appropriately priced a month later. Whereas if you're listing in May, you're going into June and July, you're kind of feeling like, boy, if I haven't sold it now, I might not be able to sell it for my price. There are going to be fewer buyers, and there's more pressure to drop your price quickly. If you do feel that your house is kind of priced on the high side, one thing that you can think about doing is offering your buyer an incentive to buy down their interest rate. And this can cost you some money. Usually it's paid at closing, it's part of the closing costs, but it helps make that home affordable for the first year or two. There's 1 year, 2 year, 3 year temporary buy down programs, but basically you're paying that extra interest for the buyer to help ease them into their house payment and help make it more affordable for them to buy the home. So this is something that you could consider as an incentive, as a way of marketing and differentiating your home to help make it affordable for buyers who might be otherwise put off by a higher price that you're charging, or the, more dated condition of the home. So that's the Seattle real estate market in a nutshell. Thanks so much for joining me. I'm Seattle real estate agent Emily Cressey, here to help you with your home buying and selling needs. If you have any questions, I encourage you to reach out to me. You can always leave a comment on this video, but I'm actually here. I'm a nice person. I'm in my office ready to help you. So feel free to email or call me, and I look forward to chatting soon. I'll see you on the next video. Thanks for watching.